And joining me on the podcast and on video, it's Vadim Alexandre, Head of Healthcare, SP Angel. You're right, Vadim?
How are you doing, Justin?
Yeah, I'm good. I haven't spoken for a while. In fact, I was doing my weekly webinar of members club, and someone did say, "Where's Vadim? I like your chats with Vadim." I said, "Yeah, we've missed each other because it's been not much happening really in the markets, but
Yeah,
we're going to do it on a monthly basis because no, I like our chats as well, and
yeah,
so
and
it's nice
Fridays
to
are
have
good.
someone.
We have a bit more time. That's why we're all, I'm at home right now, so we work from home.
Yes, well,
But
yeah, in fact, I called Vadim early. He was in pajamas. Yeah, you should do that. You should say, I'm working from home, but just being in pajamas. Yeah. So this is my thoughts for you. I know what you think. We've had, very negative markets, and I think it hasn't helped. I'm going to share the screen. This is AIM all share. All right, let me get rid of
Yeah,
some moving averages as well. And in fact, get rid of that. What do I want that? What's going on there? Yes. So you see, this is back in 2023. Hit a
yeah,
low, all-time low for 3 years. September the 6th, 2021 was the all-time high in AIM, and so we're 3 years in now to this, and we had a
mhm,
big rally in December, and then it consolidated till sort of April, rallied again from April to May, and since then it's been down, down, down. We're back at December's
yeah,
level. And I'm just thinking now, everyone's so bearish, but the economies aren't crashing. I mean, they may be slowing a little bit or stagnating or not going anywhere, but they aren't crashing.
mhm,
And interest rates coming down is going to help that. And I think the only stumbling block we have is probably two bits. In this country, there's the budget, which Rachel Reeves and Starmer haven't helped. They've come in on a policy of growth, and all they've done is talk down the economy. And now they're sort of trying to backtrack now. But I think they were laying the plans for the tax hikes in the budget. I think it's sort of priced in. I don't think it's going to be as bad as people think. And I think after that's gone, we may have some positive, movements in the markets, because I think it's the fear of the unknown, isn't it? Always, people know what's in
yeah.
the budget, so they start worrying and thinking. I've seen loads of press, articles about what could be in the budget, and it just scares people, And so I think
Well,
we
it
are
was
now
like
pricing in that.
absolutely. It was on the cover of the CDAM yesterday, I think, in saying that there's a lot of doom mongering about this IHT tax, a
Yeah,
clawback that they might impose, and so it's just a lot of uncertainty until that budget comes out. You're absolutely right. So there's the budget macro events are the budget that's
yeah,
coming September 30th, October 30th, whichever way it goes. At least we'll know where we are. Then there's the U.S. election November 5th, another big thing. Given their proximity to each other, I think you just set it at November 5th and two things will be solved. You know what I mean?
yeah,
Irrespective of which way it goes, it's just both things need to be behind us to get the uncertainty out of the way.
yeah,
And then the
yeah.
final thing is hopefully no more wars. And
Mm.
that's just another sense of, if there starts, if we continue seeing a tit for tat between Iran and Israel, and like all that kind of stuff, in the sense background worry, right? So
Mm.
if those three things could kind of just get behind us or quiet down, I think you're right. I think we've been feels like it can't get any lower, and risk appetite should return.
Yeah, and just concerning the wars, I mean, there's always, if you think about it, it may escalate a bit, but it's in no one's interest to really, escalate to the point where there is a massive ongoing war in the Middle East. And even in Ukraine, Russia, Putin keeps threatening nuclear. He's not going to do nuclear. He's a billionaire. He lives the best life ever. He's not going to get rid of that. He
Mhm.
doesn't want to wipe himself out. He's not stupid. He knows it scares Western economies when they start talking about nuclear. It's not going to happen.
Mhm.
He's a man of ego. He loves his life, and he's not going to end it very quickly, which he will do with nuclear. So it's just a threat. I mean, and I think that how long can that go on for? It's not helpful for either economy. And I think at the
Yeah,
end of the day,
I think, like you look at the Russia-Ukraine war, nobody, hopefully that'll end, but nobody even talks as much about it anymore, and it's just been
yeah,
going on for 3 years, and it's just, well, however long it's been going on, almost three.
yeah,
And that's like, I just, what we don't need is escalation anywhere. You know what I mean? So if there's
yeah,
further escalation, that'll cause, I think, macro markets to take a hit. And we'll see, you just rightly showed the graph over the last year. I think that graph is a symptom of macro nothingness, like just macro fear. And
Yeah.
what happened over that period of time? Well, we had another war, and there's been, constant kind of like stresses around that. So yeah, no, it's not helpful. We just need all that stuff to go away. I don't think it'll go away overnight, and I don't think it's that simple. I wish I could, brush it all away and pretend. But what I do think might happen is the escalation might stop, and vice versa. And I'm not, there's no picking sides here. It's just the point being is, as long as there's no more new negatives that are worrying investors, I think that's what's happening here. So I do think that chart that you have there is macro related. I think it's just macro events, getting, because over that period, what's happened actually is the central banks have turned around. So in that same time frame, central banks have started cutting rates. So the long aspired, the long wished for central rate cuts, or basically the change of direction of rates, has happened, and here we are back to nowhere. We've just done
Yeah,
nothing
and
for
it's
another year.
not just the UK and America doing this. Of course, it's globally. But I think apart from Japan, everyone's reducing their interest rates. So it's going to help stimulate the global economy. And like I said, do you know what? If you waited until there's no big worries out there before you invest, you'd never invest. There's always worries out there. It's constantly a worry. But when you get sort of bearish sentiment like this, and it's
Yeah.
just about a budget, then because I think that's an opportunity to buy. On the backdrop of central banks reducing interest rates. I mean, if you look back over time, when there's been a reduction cycle like this, interest rates, generally equities do very well. And so it's a good bet, because you're getting companies now that have been sort of just sold off because of redemptions or whatever, and nothing to do with fundamentals. They're doing quite well, and you can pick them up for cheaper than you could, say, a couple of months back, and you realize, the equity is going to rally probably in the next, like I say, barring World War III, they're going to probably rally very strongly next year, and even towards the end of the year. I mean, November, December,
I think
always very
so.
good months for the markets.
I agree. But I mean, if you listen to ourselves 2 years ago, we said that 2 years ago, and we said that a year ago. I mean, that's
Well, we
the
had a bit of a
frustration.
rally.
The frustration I have is this has
Yeah,
been particularly protracted. It's a very long
yeah.
downturn.
Oh yeah, look at that.
And yeah, in 21, no surprise. 21, 22, there's no surprise it was still going down. What's quite surprising is how long 23 and 24 have dragged out, staying at the bottom. Do you see what I mean?
Yeah,
It's
yeah.
it's the rally hasn't happened.
Yeah.
So you had this decline for almost a year and a half, fine.
Mm.
Then you had a reckoning after 1 year at the bottom, maybe, but then no rally.
Yeah.
And usually you have a rally. Now, when I say usually involves the central bank aggressively cutting rates, in anticipation of recession. Also, that didn't happen, and that's why it's true that the rates were quite important in this. But now rates are coming down. They may not be coming down as fast as people would like them to, but they're coming down, and we know they're going in one direction. And
Yeah.
yet the rally's petered out. So there's other macro events bothering us. You know what I mean? Like you say, like the
Yeah.
budget, like the wars, like the elections. First there was our election. Now there's the U.S. election. But months go by, and nothing happens. You know what I mean? And now years are going by. So it is like, without at the risk of sounding frustrated, I'm sure everyone is frustrated. But eventually, you're right. The risk appetite will return. I'm positioning myself a little bit like that. I'm picking up some stocks that I think are really quite cheap. There's one you and I discussed a while back, which was Surgical Innovations. And all of these things always have risk, right? So they're not cheap for nothing, but sometimes I feel they've overshot. But I think on that, with that view, is I totally agree with you that I do think the rallies are coming. I think we maybe got it wrong in terms of timing. Like I've been thinking this for 2 years. So it's taking some time. Some of them have rallied, I have to say. So like some stocks a couple of years ago I got into was in the online retail, which have rallied quite aggressively, and now are kind of flatlining a little bit. But I do think small caps, that was in the mid cap space. I do think small caps now are going to have their turn. So let's look at Surgical. That's the one you
Well, yeah. Well, to say one thing, I think we're off the bottom. I think the bottom is behind us, as it always is.
Yeah,
But
definitely.
no. So if you look at that, 21% rally it was from the low in October 23 to the recent high in May 24. So that's a technical bull market. That's generally a good sign. I mean, you can have some bear market rallies, but not at the bottom after 3 years like this. So I think we're off the bottom. And like when you have a big sort of rally like that, 21% in a few months, then you can have consolidation. But then you've got some other factors playing in. And even look at surgical innovations, SUN is ticker. I mean, you can see, that it follows AIM. And remember,
Yeah,
AIM is particularly hit because it is a stock pickers market because there's a lot of rubbish on AIM. There's a lot of
yeah,
companies that will never generate any revenue at all. Probably they've been, digging dirt in Africa looking for minerals for 20,
yeah, yeah,
30 years and raising money constantly. But even that's a very similar to the AIM chart. So the bottoms here on surgical innovations pretty much, zero point 0.3. And it's rallied up, it's come back down a bit, but it's still now almost double where it was from the bottom. So,
yeah.
but then you've got consolidation happening, and that may take a few months. But yeah, I think the first leg up has happened,
Yeah,
consolidation. And
I
then the
think
second
I
leg.
think I think the bottom is behind us. I agree with you.
Yeah,
I just think the rally has not been aggressive, and I think the aggressive
no.
phase. I was hoping the aggressive phase would come a year ago. Hasn't come yet,
Mm.
but it's ahead of us. I agree with you. So I
Yeah,
think
I suppose it's in tune with, like I said, how gradual interest rates coming down. It's like they say you still don't know if they're going to be a quarter every meeting yet, or whatever. They think they might make pause at certain levels, and
yeah,
that's what I said about people playing. Previously, when money was free and interest rates was pretty much zero. Obviously, you can go pre-revenue, loss-making stocks, just all about the story, and they'd
yeah,
fly because it was all about the story, and there wouldn't be no problem raising money. It's
yeah,
the opposite now, and I've said to a lot of people, "Are you still playing that game, just pre-revenue, loss-making stocks, story stocks?" It doesn't work in this environment because they need constant funding, and they can't get funding. If they do, it's generally not a lot at a very big discount. So
yeah,
it's the wrong game to play. So I said it'll be like that for a while as well because the interest rates are not, they're not going to ratchet them down.
yeah.
They're going to be incremental, tiny little quarter basis, 25 basis points, every meeting probably, or every other meeting, whatever. So yeah, it's still, I mean, it's still a hard game for many companies on AIM.
Yeah, definitely. It definitely is. I mean, look, this one is a good example of why I like it is because it's revenue generating, and
Mm.
they've been, this is a kind of a distressed asset. So, that can go badly too. So that therein lies the risk. If for whatever reason trading slows and, they get caught out, they're breach their covenants again, whatever, there's a lot can still go wrong. But they had their results recently. I was pleasantly surprised. Their revenues continue to grow. What I'm hoping for is to get some more insights. I think they're doing one of these investor meet companies on Monday, or an analyst meeting on Monday, which I hope to get some more information out of. So that's good. But I mean, in the grand scheme of things, this thing is doing about 12 million plus in revenues a year. So that's the half year results you have up there.
Yeah,
They came in with 9% growth, 6.2 million at the half year mark. And that's 12 million. That's a 12. Their market cap is like 5. You see what I
yeah,
mean? So they're
5.5.
trading on in broad brush strokes. They're washing their face. They're slightly loss making, and they are, cash is an issue, but they're able to manage it. And they have headroom in their facilities and all that, as in they have some loan facilities. So they're okay. They have to make sure that they get out of this position, and they're streamlining their processes, in terms of part of the issue is that they got hit by higher input costs than they expected, right? So they're
Hmm.
they're streamlining their processes to get around that, and it looks like they're on track and moving in the right direction. So this is a classic stock which overshot on the negative news a year ago. It was a 2p stock, and now it's whatever it is, I can't,
Yeah, 0.6.
0.6. You know what I mean? So
Yeah,
it's in my opinion, it's worth the gamble. That's the way I see it. I see the upside, barring a massive bear, turn in their trading or something bad going on. But they've kind of been delivering this level of revenues as, small. Well, it's not even that small growth. I mean, a lot of companies, it'd be the envy of a lot of companies, be growing at 9%. But my point being is, it's high single digit growth, which is not bad.
hmm
They just have to get their margins sorted, and that's what they're working on. And they have to continue their growth trajectory. I think it's going to be worth, back up to 2p at some point. It's just
So
plus
what
the
are they,
tail
surgical
end.
innovations? They manufacture. What do they do? What do they do? Manufacture.
Yeah, so they make all kinds of surgical tools, like things for laparoscopic surgery. So keyhole surgery. So they have a
Okay,
whole
yeah,
bunch of
yeah.
different instruments. one of the big drives they have is, a lot of these instruments used to be disposable. Now they have like something they call reposable. So it's kind of part of the instrument is reusable, part of it is disposable. So there's a big drive in the industry to, for tools like these guys have. Here's an example right there on the right-hand side. That's like a laparoscopic tool for laparoscopic. And it's kind of routine surgery, like hernia surgery, gastric, surgery. So these are everyday type of surgeries. And the goal here is to break into new markets or to expand, the markets that they're in. Like they're in the US, they could do better in the US. They're doing well in Asia, I think. But the main point is business has been around for a long time. Look at the share price history. It's, it's at all-time lows. And yet revenues are, actually growing and doing okay. At some point, the one thing you should ask yourself is always, can you stomach a financial problem with the company? So where there's risks is I've got my view is where I could get it wrong is the banks start calling in payments and saying, well, actually you're breaching covenants, it's not working, and for whatever reason they get into financial difficulties, but they're broadly speaking washing their face. All they need to do is keep doing what they're doing in terms of fixing their margins, and they should get there.
Yeah. Okay. Marvelous stuff. Okay. Anything else? Anything else you've been buying or anything you're looking at?
Yeah, I mean, these are all turnarounds. So like I like you rightly mentioned, revenue generating businesses that have been bombed out for various reasons and that are like have a possibility for a turnaround. Another one that was it's a long-standing, stock that we've been discussing ever since COVID, which is Novacyt. And that company, it's a similar story. All the COVID stuff is history now. That's all behind them. They even had a DHSC dispute that's been resolved. They got net cash out of it because they got a tax or a rebate for goods that weren't sold, et cetera, et cetera. So they're now, all that's behind them. And they're basically a diagnostics company. Plus, they had a merger with a company called Yourgene, which is another AIM company. And the real game on this, the play on this one, in my opinion, I mean, I don't own this one, so it's not you're asking me if I've been buying it, but I do see this one as a potential, another like Surgical Innovations, another potential turnaround. You're looking at a company that does broad brush strokes 21 million pro forma, because it's hard to see from the results the pro forma business, although you can see it's starting to come through now. And I think once it becomes obvious to the market what the play is, and the financial picture becomes clearer, I think this one could be in for a rally. So this one's does about 10 million at the half year results. So let's call it about 21 million, 20 to 22 million full year, okay, in revenues. And they've been cost cutting aggressively. As per the last analyst meeting, have an opportunity to take more cost out of the business. So that cost cutting continues, and there's more room for right sizing the business. And I think that's what's going to happen. I think that at one point the revenues will take up nicely, and the costs will be brought into control. And all of a sudden, people will wake up and say, "Well, why is this business valued where it is?" Currently on an EV basis, because plus they have a lot of cash. They have I think.
Well, they had 32 million, well, 33 million at the 30th of June, but that's come down quite a lot. Why is that? Because is that the purchase of?
So yeah, a couple of things. One is the purchase of Yourgene. The second thing was just the cost. The costs were high. I mean before the merger, both companies were burning cash. So now the merger actually made sense, right? You can take a lot of cost out of it. That's a whole part of the whole rationale for mergers, is to take cost out of the businesses. So it's proving to be a success on that basis. There's cost synergies are coming out. They have, and they're going to continue to do so. So that's good, And now the question is, can they drive revenues enough and cut costs further enough to? I don't think they'll become profitable overnight. I don't think it's not that simple. But now I think their EBITDA was 5 million losses or something like that this first half, at the half year mark. So call it 10 million EBITDA losses a year. But if you can get, and I think they mentioned in the analyst meeting that they're striving for another 5 million of cost cutting, so getting another 5 in losses out of the business. So now you're starting to look at a business that has plenty of cash that can weather this restructuring storm, okay, which they're doing quite well, and they've already taken a lot of cost. out of the business, proving that they can do so. And if they're saying they can take a lot more, well, then, proof's in the pudding. They've done it already, so they can continue. I don't think they would just be making stories up given where they're at. So, if that's a lot of cost that they can still take out of the business. So now you're looking at a business that isn't potentially hemorrhaging too much, and has a lot of cash. So I think they'll get there, is my point. So with all these turnarounds, there's always the risk that, oh, we get it wrong, the turnaround isn't working. Here, I actually see that it's kind of overlooked.
That was a big pop, wasn't it? On 14th of August, was that the announcement of the rebate or the legal thing?
So that was,
14th of
I think,
August.
monkeypox. Remember? So people still look at this,
Oh
pandemic,
yeah.
think Novacyt, and think that, I don't think, I think that's probably what that rally was. I remember discussing it with you at the time. But I
Yeah,
do
yeah.
think,
Oh, there's a VAT reclaim as well on the 22nd. So, no, in fact,
yeah,
that was
no, that's true. There was some good
that
news.
was at the top. That was though. That was at
Yeah,
the top. So
there
I
was
don't know
some
why
good news.
it ran out. There's no reason. Yeah, maybe it was monkeypox because if there was no news,
No, no,
pretty
it was.
much from
I'm pretty
July. So
certain.
yeah,
I'm pretty
monkeypox. Yeah,
certain.
okay,
And I think there
okay.
might be more rallies like this to come because, H5N1 is another potential area where there's, fear of another pandemic starting. But to me, that's not the story. I mean, the story here is it's a turnaround. What's gone overlooked is the baseline underneath is, the company is actually turning around pretty quickly.
Okay.
It's you take, let's say, 30 million off the market cap, if not more. It's trading on, because of the cash, it's trading on less than 1 times revenues, I think, right now.
hmm Okay. Anything else with Aganda?
I still like Crism, which you and I talked about. I think that one's undervalued.
Was it Prism? What?
Crism, CRISM.
Sorry, CRI.
SM. Yeah, you got it.
SM.
Yeah, there
When
you go.
have we talked about these before then?
Yeah,
When have
we
we
are.
talked about
Yeah.
these?
This is a kind of a small pharmaceutical company, basically. They're in the area of oncology. I think really the key here, and I won't dwell too long upon it because we've already covered a few stocks, but this one is firmly in the camp of, drug development, cash burning company, but unlike many companies out there, they're fully capitalized. The company we reversed onto AIM into a shell that had 2 million pounds in it, and that 2 million pounds keeps them going for quite a
Oh
bit.
yes, Amber Minerals. Yeah, sorry. Yes, it was called before they did this. It was called something else, wasn't it? I can't
That's
think what it
right.
was called.
That's
Yeah,
right.
yeah, yeah. Sorry.
So
Yeah,
this
yeah,
one, for a 3 million market cap business, it could become a phase 2 asset
yeah.
in less than whatever, in less than a year's time. They're going to commence the trial. They're putting in their application to do a trial with the MHRA, which is the UK
Chemoseed. That's
regulator,
right.
and they're going to put in at the end of this year with the hope of starting the trial at the end of 2025. But the point being is that a phase 2 asset, so that's the staging of how advanced this business is, for a 3 million market cap is quite cheap.
Yeah, 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 yeah. Oh yeah. Well, I know certain companies.
And they're cashed up to get there. They're cashed up to get to that point of starting.
Yeah, 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 yeah. No, it's chemoseed. Yeah, I interviewed this the CEO before it reversed into things. So yeah, Andrew Webb. I
Yeah.
interviewed him before it sort of reversed. Yeah, yeah. No, very interesting. And okay. Yeah, a lot of companies. In fact, there's very few companies rallying in the markets at the moment. But it's always very interesting just talking about today. Premier Miton Group came out, which is
Yeah.
they're a fund manager, of course,
Yeah.
many smaller cap funds, and they did say that there was net outflows for the quarter, but it was a good summer. But as Michael Shear said, there um, significant uncertainty ahead of the budget in UK this month appears to have dented investor sentiment more recently. As a result, the improving environment for sales that we saw over the summer has reversed, and they had one big I think investment trusts redeeming their money there, 133 million. So, but they're saying there hopefully, investor confidence will return post budget. I mean, in fact, I don't think it's going to be this bad until the budget. I think you'll get some leaks coming out, and normally you pretty much know a lot of what's in the budget before it actually happens because of
Yeah.
leaks. And so I think if you assuage people's fears that the worst case scenario is not going to happen, which is being sort of priced in a little bit, then I think it will rally nicely. And again, it's the backdrop of lower interest rates happening. I think hopefully maybe 2025 will be the year. We said 2024 will be the year, even 2023, but it hasn't played out. But maybe 2025 will be the year when we start the bull market on the AIM All-Share Index. Who knows?
It feels like it, and I think at least we have the fact that it felt like it couldn't get lower, and if it's actually, you know, we hit the bottom. I agree with you. Barring a massive macro event that again we're so sick of,
Yeah.
you know, we should be on the up and up. I agree.
Yeah, I mean, the thing is, people say, when people say it's different this time, it's hardly ever. But the difference is, and it's a major difference, the biggest mover of the markets are central banks, you know, and they
Yeah.
are on the downward cycle as far as interest rates are concerned. So
Yeah.
that is the major catalyst, I think, beyond anything else.
Totally agree.
That will drive money into the markets, you know.
Yeah.
Marvelous stuff. Vadim, thanks for that. And we'll speak in, no, not next weeky, speak in a
Yeah.
monthly.
Exactly. No, that's great. Thanks, Justin.
Cheers, bye bye.